Mahmud, good morning to you and welcome. Welcome from Davos.
Thank you very much.
How was Davos?
Very nice, not too cold.
Yes, this is a good time.
Yes, no snow.
Yeah, I was following the activities. You attended. Let me just ask you for a minute. I know you were not expecting it, but what were the feelings you got from Davos? Because what I was seeing from here was like, of course, global central banks are tightening. There was this, apathy, or there was this sense that the global economy may likely enter a recession. George Soros, who is the billionaire, did talk about that with a few people. What was the sense that you all had there, and what did you bring back?
Yeah, principally two issues were critical at the Davos. One, the global uncertainties, and secondly, and more importantly, two, those that participated there were climate issues, issues around sustainability of the environment and how the global economy is responding to those climate change. From our continent, we have our own perspective of the global issue, of the climate issues. However, around growth and the concerns around what is going on in advanced economies was also playing out. Issues around debt in developing and emerging market economy was also a major concern. And then how to get the disparity in the growth recovery post-COVID. Why advanced economies, a lot of them have pulled out of except for the recession that is signaling some of those economies now. But at least you see a large number of developing and emerging economies still struggling, to go to their pre-COVID growth path. Global trade has also crashed significantly, and that was also a major concern. And then the Russia-Ukraine crisis was also a big issue that was being discussed there, and how particularly the European economies are able to, maintain some level of recovery in the economy and also reduce the humanitarian casualties coming in from there.
So many things to grapple
So many things, yeah.
Oh, I don't know when this will end. Anyway, let's get to the issue of the day. To what does the CBN attribute this budgeting inflation? Because we saw April inflation, 16.8%. Yeah. You are the people that watch inflation. You are the Secretary of the Monetary Policy Committee. So to what's this inflation, what did you people attribute it to? Because, the last time we've been talking, structural factors is not really monetary driven, a whole lot of stuff. Is it that, or there's something else that made it jump?
Generally, we look at many things when we're appraising inflation numbers. There are structural issues, there are monetary issues, there are other issues that are also not related to core microeconomic activities. There are issues around inflation expectations, which is driven by what people think prices will be, in the future, in the near future, and they make adjustments. It's either they hold on to their activities and watch to see, or build in that expectation in their current prices. And you see that already impacting that. So that is not related to real production, but it's related to the uncertainties they see around that, and they need to ensure that their returns, are assured over the period in terms of what they get from their cost of production. For the reason largely behind the rate hike, there are two sides of it. The global scene was characterized by three major developments. One, the growth recovery was slowing down. Two, the advanced economies, the US, the UK, the European central banks, have stopped releasing money to the economy to support the COVID crisis and are gradually increasing rates, their policy rates in those economies. Those policy rates are important in terms of the investment flow, foreign capital flow in those economies and out of our economy. The third part of it was the Russian-Ukraine crisis and how that is also related to energy crisis, the prices of energy, cereals, food, commodities, and how trade has also collapsed. So we see uncertainties coming there, hitting the international financial system because of the credit crunch and all this asset price development that was taking place. So that is at the global scene. At the domestic scene, you see that month on month, inflation numbers have been picking up, but very marginal. but the April numbers picked up almost 90 basis points, which was a big jump according, from our own assessment. 2, you will also see that both core and food also jumped, substantially. 3, there are a lot of interventions that have gone into the economy over this last, from 2020, end of 2022 now, both from the fiscal and central bank interventions, including interventions that went to household financing in the sense of, given support, COVID loan, target credit facilities, and all that. So you see a lot of injection into the economy. So aggregate demand has increased substantially. Income levels have also increased. If the production level is not coming up to meet up that volume of increase in demand, you start seeing prices going up. So while we're saying, yes, inflation was more of supply push, now we're seeing demand pull coming into that space. And so there was a need. There's also the concern around credit expansion. Central bank, you just mentioned in your analysis now, how we retain the rates for some critical sectors at 5% to still stimulate that space. But we also see that private sector participation in that space was growing, but not growing as fast as we expect. So substantial part of those interventions were coming in from central bank, from the fiscal authority, and you see that making the private, our banks now, sitting back a bit, even though they are also taking into consideration the uncertainties around those processes. You don't give a loan until you're sure that the loan will be paid back. So if you have issues around infrastructure, around security, around delivery to the end users, then you start pricing those risks into your cost of, So those domestic fundamentals were also critical. So what was central bank or monetary policy members looking at? 1, we have seen some level of growth. That growth quarter on quarter was also, slowing gradually, even though still substantially positive. 2, we are seeing the development in the global environment, the oil prices and the energy prices that is also feeding into our own energy prices, and then our core inflation. Even our food inflation, some part of it are imported inflation, because in that component of the food basket, we also have some semi-finished and finished goods like beverages and all that, which some of them are imported. So we're looking at that space. We're looking at how to sustain the employment level, given these aggregate demand numbers I gave you, and how the SMEs and the small and micro enterprises will continue to strive in this space to keep that labor force. So many things we're looking at. So the concern was this inflation is eating into these growth numbers that we're seeing. So at the end of it, real effective income is declining, because inflation is the denominator of our GDP. So while nominal terms, yes, you are seeing the number going up, the things you can buy with those income is reducing, because the prices are now higher. So it was a concern that we looked at that, because inflation impacts more the poor, the low income group, and it was important that we also look at that space, because it's important that the growth that we're seeing is inclusive and participatory.
Now the question will be, with this interest rate hike, how do you balance growth? Because there are worries about growth, definitely. We are in the 3% band. How do you balance it? You are raising interest rates where we have slow growth. I hate to ask you this question again, because I know I asked you this question on Monday at a forum that I moderated. So how do you balance it?
Well, there's a threshold that we look at in all of these numbers. And like I said, while the MPC members kept the rate where it was the fact that they were sure that the injections are required to stimulate growth to a particular level. If we've gotten to that level, then we'll start seeing how we make sure that the inflation numbers are not reducing the real effect of that growth. So we start adjusting those numbers. But the dilemma, or even trilemma, is that, yes, we want growth to continue, and you need to bring down rates to increase credit to allow growth to expand. But you also want the inflation numbers to come down. And for inflation numbers to come down, you also need to increase the supply side of those effects, and that's why we left the rates at the intervention and sin. And then the third part, we also concern about the global developments. Because the advanced economies are normalizing, increasing rate, Nigerian economy needs to be competitive in terms of, one, retaining its foreign capital, and two, attracting new foreign capital. And there's what we call the, I don't want to be using technical terms here, but when your interest rate is way below your inflation numbers, you're going to be in a very negative territory. Yes. So, and that negative territory means that your ability to attract capital domestically will weaken because people don't want to bring in their funds.
So part of this decision was to
to narrow that space so that capital mobilization, both domestic and foreign, can be enhanced too, so that even if central bank and fiscals are intervening, the private sector should also be able to drive that. But private sector needs to raise those funds, before, and those that will give them those funds will want a rate that will be commensurate to the risk or the opportunity cost of not spending that money.
That brings me to the point that whenever the MPC raises rates, of course, the next thing will be that banks will raise their lending rates because all the rates are anchored around that. So the cost of borrowing money has increased. How should it be dealt with? Because businesses cannot borrow money. Manufacturers Association of Nigeria, in fact, the next day after your announcement, came out and said, oh, you are going to hurt businesses and all of that. So how do you balance all that out?
Okay, there are two ways to look at this. One, you look at it from the supplier side, and then you look at it from the bank side that gives out the loans. If suppliers are not able to clear their inventories, their stock, if they are not able to sell, they have to lay off their workers because they will not be able to pay their workers. When they lay off their workers, you start seeing unemployment numbers rising. And if that rises, then the people that are having money to spend are reducing. So you start seeing cyclical effect of that impacting more on reducing growth, reducing production and productivity, more unemployment in the economy, and you see a reversal in your growth trajectory. We don't want that to happen. Secondly, for banks to be able to lend, they need to have been able to cover their expected or calculated risks, in that space, the premium they're going to put in there. So we don't, even though we use moral situation on the part of the central bank that banks should lend, but it's their business decision, and they need to also appraise the lending environment. They look at their risk profile and what they want to go to. We want banks to go into agriculture, manufacturing. Those are the sectors that really impact on the rest of the economy, export because of foreign exchange, but they need to raise those funds domestically. So if it's just like when you look at savings and lending rates, even though there's a wide disparity, but the complaint has always been that the saving rate is very low. So people don't really want to deposit their money in the banks. It's rather, you either go and invest in FX or you keep the money or you do or other risky ventures. So you look at it from both the supply side and the demand side. That is of money itself now. And then those rates will now be what you need to balance, which is the priority that you are looking at.
So the question now is, with this, when is the MPC or the CBN anticipating that inflation should fall? Because if it's at 16.8% now, what are you looking at? What is the short-term outlook for inflation and the medium-term outlook for inflation, the long-term outlook for inflation? Bearing in mind too that election 2023 is here. I don't know. Let me also join this so that you would answer. How is the CBN or how is the MPC going to deal with this? I call it this dirty election money that we're seeing around, the dollarization of the economy and all of that.
In our inflation forecast numbers, we already built in these injections that are likely to come in from election spending and other political activities that would take place, from the shocks from the external environment, from the internal shocks. We build that into the space. The projections are still that there are still threats to inflation, which is going to continue. 6 threats? Still there are still threats, to inflation. The uncertainties are still very high. inflation numbers in advanced economies are like 9%. These are countries that for more than 10 years were doing inflation number of less than 2%, yes. 1%, 0. And so if you see that, and we have trade relations, business relations, investment relations with this economy, so those would definitely impact on us. Looking at those space and then discounting that with the level of injections that we've done in the manufacturing, in the agriculture, in the SMEs, in the services, we'll expect that in the next 1-2 months, we'll start seeing a trickling down of those inflation numbers to a level that, yes, monetary authorities will start thinking of what is the next step to take in terms of how the signal using the monetary policy rate. So I can't sit down here and say immediately inflation numbers will go down in June or July. Nobody expected the Russia-Ukraine crisis to pick up, when it did, even though there were signals, but nobody thought that would crystallize and have this impact. We're also concerned about, food crises because of all these prices that are going up, in particular for some cereals that are being imported. So the bank is also looking at, how to enhance our reserves of those commodities and how to also, expand, productions of those. But other issues are also affecting that: security, rainfall, climatic conditions, funding. So the economy is just like that, surrounded by uncertainties. It is left for you to, make your projections, your calculations, build in these numbers very, very objectively, and be able to, take decisions that will enable you to, float on the waters. But you can't affect, you can't stop the waves of the water, but at least you stay afloat.
Okay, what is that afloat rate? Let me put it that way. What is the comfortable afloat rate for inflation that the CBN is looking at? I know there's a target of single digit. We've not hit that since 2014, if I'm not mistaken. Yeah. So what inflation rate could be a comfortable position for us, even as we enter 2023 elections?
The inflation rate will be a reflection of the prevailing circumstances at that time. So you can't say, because, yeah, if you say the inflation rate is also floating. So the monetary policy rate will also be floating, in the sense that it's not static. You adjust it to the things that we are seeing. And that's why I gave you like 6, points of why that decision was taken. So as long as those decisions, those parameters, those influencing factors changes, so also with these numbers change.
Okay, are we looking at an end to easy money? Let me put it that way, in terms of quantitative easing from the CBN. Of course, at the MPC, the governor did reel out the interventions, the amount, and all of that. Yeah. I'm asking this question based on the fact that in the US, for example, the Fed has kicked off the quantitative tightening, QT. Yeah. So we've seen QE in Nigeria, at least in the last 2 years or so. Yeah. Are we going to be seeing an end to that easy money anytime soon? Or is the MPC also looking at, okay, let's tighten interest rate, let's raise interest rate high, then the CBN on your part still be pumping money not to allow growth wither? Yeah, I hope you understand that.
I understand. Yeah, there will definitely be a ceiling or a period where we'll start pulling back. Globally, that period has commenced. Global economies have started that. Emerging market and developing have also started slowing down, because we are seeing a proportion of those injections becoming inflationary, and there was a need to slow down in that space. But we're also mindful of the fact that at what level of growth or stability are you to stop? Those that are at that level have reached some reasonable, they've surpassed their pre-COVID growth numbers. We have not reached there. We don't forget that we're doing 6-7%, in the last, like a decade ago. We're still doing 3 to 4%. So we still have space. The potential output gap is still large. So we need to also, consummate that and have the economic growth to a level where we can start saying that, yes, we are stable enough, employment numbers are good enough, poverty reduction is good enough, and then we'll start moving the economy to that space.
Is the CBN really worried about high prices? How do you people sleep? Are you really worried about prices of food and everything going up? You know, because for me, for example, if I buy something today like 1,000 naira,
Yeah.
I go next week, it's 1,200.
Yeah.
Are you all affected too, or you are immune from all this? And how? I understand you've been answering the question somehow, but I just want to know the extent of concern at the Apex Bank about inflation. High prices going up, everything they cost. Let me put it in a local palace.
I can tell you for sure that the central bank governor does not sleep because of oil prices, because of inflation numbers.
He doesn't sleep?
Yes. Even if he sleeps just to make him function as because, and I can also tell you something privately, even though I'm on TV, that the CBN governor is so worried about inflation numbers that when we come to MPC, when you reel out all these fundamentals, you say, MPC members, help me. How can we bring these numbers down? How can the people, the ordinary people that are earning, minimal income, be able to feed themselves and feed their family and take their kids to school? So it is very, very, and that's why I said the most vulnerable, those that are most impacted by this inflation number are the poor. And those are the critical people of the economy. That's all government is interested in, is to safeguard the standard of living of these people and reduce poverty to a substantial level. So if you are mindful of the welfare of your people, or your population, then inflation is a very critical factor that you must look at, so that people, what you earn, your disposable income is enough to keep you afloat and make you meet your basic. We're not talking of luxury now, but just living standard, good basic things, health, education, and food on your table. So it is very, very critical. And I know that everything around the Monetary Policy Authority is largely looking at, how to bring down the inflation number, how to make it stable, and how to also, improve. Because the argument has always been monetary policy tools are more for demand management, how people behave. And that was why the central bank went into supply side management, all these quasi-fiscal things that people are talking about to boost that, and that is yielding a lot of results. If we've not done those improvements that we have in agriculture and manufacturing, these numbers will have been a lot worse than this. So it's a major concern. Even if some of us sleep, I tell you that governor is
Please
taking
tell him
part
that
of
we
that.
are not sleeping again. that we need the prices to come down. Just in 30 seconds, I hope you can answer that. The further mathematics question I said earlier, plus 100 basis points minus 700 basis points around the MPR, what does it mean in just a few seconds?
It's, I don't know if I can do it in a few seconds, but it's the upper and lower band. The rate at which you lend, that the central bank lends to the commercial bank, and the rate at which they deposit with the central bank, what they earn on that. I can just say that in 30 seconds.
Okay. Plus 100, that's 14%.
That's the upper bound.
Yes.
Minus 500 is looking at the lower band. 700, sorry. 700. Yes. So the OBB, what you call the OBB, the Treasury bill rate. Yes, yes. So those are supposed to be trending within that space. Because banks also deposit funds with the central bank, and the central bank also lend to the banks, because the central bank is supposed to lend to the bank to be able to make them meet their daily transactions. So those are the bands that are brought into that space.
Dr. Mahmud?
I hope it makes sense.
Yes, it does, at least as basic as possible. Yeah. Dr. Mahmud, thank you for coming. I hope we will have another day. We can just take off another day and look at understanding MPC.
Yes. I think it's important.
I think it's important.
Yes.
It's just coming to my mind. So we may do that on another day. Right. Understanding MPC and the terms. Thank you very much for coming.
Thank you very much.
Again.
Yeah.
I've been speaking with Dr. Hassan Mahmud, who is the Director, Monetary Policy Department at the Central Bank of Nigeria. You've heard it at least in the last 30 minutes why the CBN's MPC took that decision to raise interest rates.